So, picture this. Last earnings season, the biggest names in tech, we're talking Microsoft, Google, Meta, they all come out with fantastic news. Everything's looking up. But then their stocks tank. Why? Well, the answer is tangled up in a $100 billion spending spree that has Wall Street absolutely spooked. And today, we're going to unravel that exact puzzle.
All right, so before we can really get into the juicy part of this mystery, we've got to get on the same page with one key term. You're going to hear it a lot, Capex. So what is it? Well, Capex, or capital expenditures, is basically just the money a company spends on big, physical stuff that's meant to make them money for a long, long time. The analogy here is perfect. Imagine you buy a house to rent out on Airbnb. That house, that's Capex. Then you decide to add a killer swimming pool to get more bookings. That pool is also Capex. See? It's an investment for the future, not just a day-to-day cost.
Okay, so here's that paradox I was talking about. You had companies like Microsoft and Google reporting killer earnings, really strong revenue, and an amazing outlook, all thanks to this massive AI demand. You'd think Wall Street would be popping champagne, right? Nope. Instead, they hit the sell button. Their stocks dropped. Good news was literally met with fear. What's going on here?
And that brings us right to the heart of our explainer today. I mean, if AI is the future, if it's the next big thing, and these companies are dropping billions to build it, why on earth would investors punish them for it? It feels totally backward. It's like punishing someone for investing in their own success. To really get why the stocks dropped, you first have to put yourself in Wall Street's shoes. It all boils down to a deep, nagging fear that's all about one thing: getting paid right now. Here's the thing you have to understand about the Wall Street mindset. It's often all about the short game. Like, what's happening this quarter, not what's happening in the next decade. So when they see these tech giants announcing just eye-watering amounts of spending, even if it's for something as huge as AI, all they see is a massive dent in today's profits. They hear hundreds of billions in Capex, and the alarm bells go off. They start thinking, whoa, they're just burning cash on some far-off dream, and that makes them really, really nervous about those immediate profit margins.
But, and this is a huge but, the tech giants see this completely differently. For them, this spending spree isn't some wild optional bet. No, this is survival. This is the price of admission, the non-negotiable ticket to get into the next era of tech.
You see, they get that AI isn't just another cool feature in an app anymore. It's not a side project. It's quickly becoming the actual plumbing, the core infrastructure of the entire internet. It's the new way we're all going to talk to technology, and it's set to be the engine that drives all digital growth from here on out.
And you know what? We've seen this movie before. Every decade or so, there's a huge new wave of technology. And every single time, it requires a massive, crazy expensive build-out of new infrastructure. Back in the 2000s, it was the internet itself. Then in the 2010s, it was mobile. Then the cloud. And now it's AI's turn. And this build-out is the biggest one yet.
So this is why they don't see it as burning money at all. They see it as buying their ticket to the show. Because if they don't make this investment now, they risk getting completely locked out of the next 10 years of growth. They risk letting a competitor build the platform that everyone else has to live on. In this race, not spending is actually the biggest risk you can take.
And the funny thing is, this isn't the first time Wall Street has freaked out about this kind of spending. Not by a long shot. And if you look back, history gives us a pretty clear lesson about who usually ends up being right.
I mean, just look at Amazon. For years, people on Wall Street tore them apart for pouring billions into this thing called Amazon Web Services, or AWS. They called it a money pit, a drag on the whole company. And now AWS is one of the biggest profit engines on the entire planet.
It's the exact same story with Microsoft. When Satya Nadella bet the entire company's future on the cloud, investors panicked. They were so worried that spending all that money on Azure would destroy their profit margins. Well, fast forward to today, Azure is pretty much the global hub for AI, and Microsoft is the most valuable company in the world because of that bet. We can even go back further, to Google in the 2000s. They got hammered for spending what seemed like an insane amount of money on data centers. But guess what? That very same infrastructure is what powers everything they do today, from search to YouTube all the way to their most advanced AI, Gemini.
But okay, in the middle of this absolute spending storm, there's one giant who's being suspiciously quiet, taking a very different approach, and that's Apple.
Yeah, so unlike everybody else, Apple is not out there announcing these mind-boggling $100 billion Capex plans. They're playing it cool, preserving their cash, and keeping their financial reports looking perfect. And for now, investors love it. Their profits look super stable. You could say while everyone else is riding a tiger, which is powerful but really dangerous,
Apple is just kind of watching the battle from a safe distance. But that brings up a huge critical question, doesn't it? If AI really is the next big operating system for our digital lives, then the companies building the pipes, Microsoft, Google, Amazon, they're the ones who are going to have all the power. So is Apple's financial calm today actually setting them up for a massive risk tomorrow?
So let's just take a second to absorb what's really at stake here. I want to show you the scale of the bets being made, and honestly, the numbers are almost hard to believe. Okay, just look at these numbers. Seriously, this is where you really see the commitment. We're talking about projections for 2026. Amazon is staring down the barrel of $200 billion. Google isn't far behind. And Microsoft? They're on track for about $150 billion a year. I mean, this isn't just a side project or a fun little experiment, no way. This is these companies going all in, making generational bets to become the literal foundation, the bedrock of our entire AI-powered future.
So what's the big takeaway here? At the end of the day, we're watching a classic showdown between short-term fear and long-term ambition. This AI spending race, it's not optional if you want to be a leader in the next decade. Wall Street's panic is real, but it's focused on the wrong time frame. And Apple's calm strategy? Well, it's a fascinating gamble. It's a strength today, but it could be a huge weakness tomorrow. Because if history has taught us anything, it's that the people who build the revolution usually end up ruling it. And that leaves us with one last thought to chew on. As you watch this incredible AI race play out over the next few years, just remember this. The companies getting all the criticism from Wall Street for their spending today, they might just be the ones building an unshakable empire for tomorrow.